perfect. So nice segue into this next segment there, Susan. We're going to build on what you said there. But again, my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. Delighted to be on this panel. Two of my favorite people at VectorVest in the same panel. Yeah, I'm excited to be here. So yeah, let's get right to the two stocks. Yeah, I've been here since Moses parted the sea.
Since the Grand Canyon was a crack in the ground. That's how long we've been here.
Yeah. All right, so we don't need to go into all that. Yeah, let's get right to the stocks, guys. So just to kind of build up on what Susan was just saying there, you know, we want real profits, right? And so actually the clean energy space is more than just electric cars. There's lots of different options to choose from out there. I'm going to pick on one here that really shines in VectorVest. It's called Renewable Energy. This is the name of the company. And boy, what a great name for this day and age as well. But they deal in replaceable of fossil fuels, okay? So it's an industry that actually, or it's a company rather, that actually could really do well no matter what the outcome of this election happens to be. When we look at the price, it's currently trading $59, valuation is 73. Okay, so it's undervalued. I like that. I know right away, by way of VectorVest, who I trust with my life at this point, that's why I've been here 19 years, you know, I know that I'm getting a good and fair price. In fact, I'm getting an undervalued stock that has, you know, all the means to be $73 a share right now as we speak. Then as we slide across the data to RV, that gives me an idea of what the upside potential is and what it truly is. And what I mean by that is, you know, I'm far better off buying this stock than putting my money in a safe investment like a AAA bond. I should outperform that AAA bond by 48% over the next 1 to 3 year time horizon, which is terrific. Odds are, I think it probably excels even better than that. One of the things that's great, not only is this a company that is making money, and I know that actually by the RV score, you can't get a high RV unless you have really two things: real profits and strong growth. So maybe before we get to the safety component, let's scroll to the right. The growth rate is 21% a year, and they're already making actually $5 a share. So even if you did something as simple as a PE analysis on this stock, you're getting an exceptional value. You're running a PE on a forward basis of just north of $10 a share, which among the industry, you know, is clearly going to be a leader. As we scroll back, the next thing that I want to know as an investor is I understand the stock is safe, it's undervalued, it's rising in price, but how consistently do they turn those profits? Well, the story gets even better. So when we get to the relative safety component, the RS, it's above 1. So I know immediately that this company, it's not something that just happened. It's been happening for a while. You can't get to a relative safety rating of 1.3 unless you've been growing your quarterly profits quarter after quarter after quarter, year after year after year. That's how you get to a 1.3. 1.4, by the way, is considered excellent, and you're in blue chip type caliber at that stage, okay? So might be interesting to some folks to, hey, we're talking about a clean energy stock here that's nearly a blue chip, okay? When we look at the relative timing, it is on fire like nobody's business. Now, it's not as hot, you know, quite frankly, my two favorite stocks in the entire clean energy space, one is Enphase. We talked about that one last July, 2 Julys ago.
What was last July?
Nope, 2 Julys ago, and it was trading at $30.45. Now it's $105 a share, and it's not done, okay? Then you have Jinko Solar, which is probably the hottest stock in the whole space right now, and I really think that's another good one. Those are my two favorites. This is chopped liver here. This is number 3. But, you know, it's safer. It's safer. It's been more reliable over time. It's got more of a proven track record, and it's got a lot more earnings power. So those are all the reasons why I chose this stock. Safe, undervalued, rising in price, very predictable, very consistent earnings. Let's look at it on a chart. All right, so here it is. We can just go down to 3 months. But you can, boy, did you see that earnings down there at the bottom on that prior chart? My goodness. So this just hasn't been happening for the last 3 months, right? Here's what I like, just a few things real quick. This stock is not too parabolic. There are a lot of stocks in the industry that are super parabolic right now, like the Jinko Solar that I just mentioned. I think it's moving up at a nice, reasonable pace. It's undervalued, and that value is continuing to climb. You can see that green line up top continuing to climb. Generally, that's going to be a result of increased earnings out into the future. So that bottom graphic where Glenn has his mouse right now, that's your earnings per share. Earnings per share in VectorVest is on a forecasted basis, okay? So we take into account a lot of trailing data up to 12 years, but we also then put a lot of emphasis on where earnings are going. So we look at the end of this year and the end of next year. So we take sort of those three main components, we extrapolate all that data into a forward-looking projection. It's a one-year projection. So when you see that blue area graph rising, it's not that earnings are rising right now while they are, but it's more that earnings are rising a year into the future. That's a window into the future. You're not looking in the rear view mirror or looking at what's happening today. You're looking at what's coming down the pipe, okay? So all of that leads me to believe it's a good solid pick. I like this anything from short to long term for all the reasons mentioned, just like yours with West Pharmaceutical?
West Pharmaceutical.
Yeah. So similar story here. I mean, I like it really on both fronts. If I'm going to buy it right now, I buy it above the high today. Okay. If not, same. It's always the same for me, guys. And if you've been watching these hot stock picking panels, it rarely ever changes. I'm either going to buy as it continues to rise, or I'm going to wait for it to pull back, because it will, to that 20-period moving average. And when it does, the kiss, all I need is higher stock price the following day, or if it takes 3 days or whatever. As long as it snugs there, starts to move up, that's really your best buying opportunity, because the move is just beginning when you get in on those. So you can treat it a couple of different ways. If I buy it tomorrow, I start small, wait for the pullback, buy more. Glenn.
I like the stock. I'm biased to that industry. There's no ifs, ands, or buts about it. I'm biased to the industry, and this is a good stock. I actually put this on a one-year graph.
You and I are. I shouldn't speak for Susan. I haven't talked to Susan.
Oh, don't worry. Susan is well able to talk for herself.
I know.
That's okay. I'm going to come back to you. We're all good. We're all on the same page on this one.
I love the earnings per share, and look at the big bump up in earnings. And as Steve says, it is a window to the future. It's forecasted. And as that bump happens, look at the anticipation of the stock's price. That is a beautiful big stairs. That's a lot of stairs. It's just going up. That is climbing the stairway to profits.
I thought you were going to say
no.
I'm going to say heaven.
I couldn't, but I didn't want to step on nobody's toes. Got some
that
people.
Is the stairway to heaven,
that is,
Glenn.
Listen, I got people that are flaky that way. Yes, I said it. So it's really climbing the stairway to profits. Yeah. I love the pick. He's one of the only ones in here, I know, especially as far as my stocks are, that is undervalued. That's hard to come by in this day and age right now, for the most part. So a good, solid stock, moving up, undervalued, hot industry. I don't know what more you can say about it. That's a beautiful pick.
Oh, I bet Susan has a couple of things.
Oh, Susan, I'm looking at the face. I'm looking at the face coming, guys. Come on, get to me. Is it my turn yet? Is it my turn yet?
Kick it to Susan.
Oh, jeez. God, we're beginning to see each other so much on the camera now that you're reading my facial thoughts all at the same time. Well, here's where I'm going to go back to. I'm going to go back to a little bit of my point about earlier is, is this area profitable? And I mean, certainly, for sure, Steve. I mean, this stock has shown so. And I think certainly there kind of is a whole putting together now of all the terms that's out there, like, whether it's green energy, whether it's environmental stocks, or whether it's electric cars, we can put them all together, but they do deserve to be taken apart. And particularly when it comes to renewable energy, I think it's important to look at what underpins this. And the second question is it scalable? And of course it's scalable because green energy is abundant. That's why it's called renewable. It's abundant, and to a large degree the sun shines and the wind blows for free. It does a little bit more of the wind bit in Ireland, and certainly the rain bit, than it does the sun sometimes. But certainly we know that that's for free. So it was just interesting. I took a look around for some analysis on this, and based on the investment of $100 billion, wind and solar projects will produce 3 to 4 times more useful energy at the wheels than oil will at $60 a barrel for diesel-powered vehicles. Now, in comparison, for petrol cars, the ratio is even less favourable, where the renewable investment will produce 6 to 7 times more energy. So the point here is that if you can get this right, at certain prices of oil, that the economics of this, when it comes to the per transaction basis, really does change. So then, of course, we have seen a dramatic fall in oil prices over the summer, and now we're watching this all the time since, particularly how it affects airlines and so on. And all the time, the reason I'm bringing up this when it comes to renewable energy is that is the main competitor. It's always been the adage, like, why would you put the time and effort into taking green energy and renewable energy and the huge investment, like I told you, all of the money that governments are spending and so on, when the oil price is so low? In essence, you've got a theory of opportunity cost here. But the economics are turning now because there's been so much money put into this area. And of course, we know that it gets harder and harder, more expensive, more politically expensive for sure. It also gets more environmentally expensive to drill deeper and deeper for oil. But the other thing is, of course, is that oil itself is a renewable, or is a non-renewable source. So actually now, based on all of what has happened around this, is that for the first time ever, there is a competing energy source now, which is green energy, short-run marginal cost of zero, now with all this investment put in place. And it can replace up to almost 40% of global oil demand once it has the necessary scale. And that's the tipping point that's changed. So I think, you know, I won't go into any of the stock analysis elements because, Steve, you've done a great job of that. So there's no need for me to go into that. But what I will say is, it has a bit of a shade of what I was saying just around blend stock there, is that things have changed when it comes to green energy, from the demographic changes and the environmental changes and where governments are getting behind it and putting money in there, to the point of where it's now like sandbags are now kind of topping up the river, and now we see a big change tipping over here. So I think it's a great sector, and I think it's one we'll be talking about for years and years and decades to come. So yeah, I really like this stock. It's one that I'll be watching out myself and for future.
Interesting. I want to touch on that point of green energy has been around for a while, but it's been stymied a lot for a while. Why? Because oil was the predominant player. And right now, oil is under a whole lot of pressure. We've already talked about this on Trending Thursday, Susan. The demographics behind oil. You know, people are not working. A lot of people are working from home now. So people are not driving to and from work anymore. Oil and the Saudis and the Americans and everybody's trying to come to the table to try to bolster oil back up, at least to some semblance of where it was before. But the demand is not there. We had an oversupply of oil for a while. Oil was sitting in the water, all right, on boats. And you know, in Trending Thursday, I talked about week after week after week what moves oil. Demand. And then when oil contracts dropped way below below zero, and then people went out and bought it. And I stepped back and still said, go ahead. I'm not going to tell you not to buy it, but that was actually a buying opportunity of a lifetime. But now you got it, now what? All right, so I mean, that was a short-term play because of what happened with the futures contracts. But on Trending Thursday, I've been saying, there's no demand. The demand is not there. And now Susan's talking about governments are now putting more money into it. Activists are now pushing more towards the renewable energy. Now it's a bigger boy at the table, whereas before it was just a little brother. Hey, little brother, can I come up to the table? Can I play? No, go away. Big oil is the guy. They said, okay. Now big oil is going, well, come on to the table. And that's where we are right now. And it is a difference in the paradigm. I really wanted to say paradigm, but the paradigm has changed, and now is, you know, this was a speculative play a long time ago. Now it becomes a real player in the game of energy as far as renewable energy. So I wanted to put that out there as well. The paradigm has changed, and now getting you into it, or at least looking at it, I think, just think about it. If you're not into it, if you believe in it, whatever. But at least we're putting it out there for you to consider. All right. Let's go back to the viewers. I'm ready for your seconds. Why you look at me like that?
Oh, no, nothing.
You give me a Steve look.
I'm thinking about what Ray's thinking about right now. Like, I put Chappell on this panel, and he talks a lot, but he's got nothing on these two guys. I mean, we might be here till 5 o'clock.
Wow. Hey, let's get to your next stock.
Okay. All right. So, yeah, a little comedy relief there, I guess. All right, so next stock. I think that, this is, well, if you grew up in my era, this is cheat mode right here. When, in times of uncertainty and uncertain outcomes that may be prolonged and recovery or lack thereof, or, everything that we're confronted with today, really. There is a certain segment of stocks that just always tends to thrive. And one of those stocks is Dollar General. So we're going to talk about Dollar General. Dollar General, you've probably got one within 2 blocks of anywhere you live. There's probably more on the way. But anyway, Dollar General is tracking $214 right now. It is, believe it or not, undervalued. Value's coming in at $279. Earnings has really been rocketing, I think, here as of late, as far as they're concerned. So I guess I'm not that surprised to find that it's undervalued. When we look at relative value, it does have a higher score. And while they're still making the same 21% a year on a growth rate basis, they have a much larger nest egg of earnings that they're sitting on. So almost twice the earnings power of renewable energy. Just, if you look at the EPS number out there on a forward basis, you're looking at 913 compared to 546. So it's, they're growing. They have a lot. They're growing it just as fast and even more reliably. If you look at the safety rating, it comes in at 1.4, which is that blue chip category. Okay, so this is a staple. It's probably not news to anyone, although I'll be honest. From time to time, you do forget about stocks like this because when you're in a rabid bull market, these stocks don't do, Dollar General doesn't do very much. And in a lot of cases, it might even go down because it's the last thing that you're thinking about buying. But in times like this, where people are still worried about, can I put food on the table, and things of that nature, this is where you go. I mean, out where I live in the country, I'm fortunate to have some beautiful land out in the country. So this is where everybody goes. Anyway, but so they're everywhere. Who cares about any of that stuff? What I care about is what VectorVest says. I think I like a good story just as much as everybody else. But what I care about is, what does VectorVest say, right? It's got tremendous upside potential, one of the highest scores with RV in the database. I mean, there are a lot of stocks higher, but it's up there, okay? The safety rating is going to be among the cream of the crop. The relative timing, this isn't a stock that's going to go up 30% in a week, right? Like a clean energy stock. It's just not, okay? But if there's a stock that is sure as shooting going to go higher when we're still dealing with uncertainty a month, maybe 2, maybe 3 months from now, this would be it, And so that's why I would pick this one. If we look at a chart, you'll see what I mean. It's just a steady climber, guys. It's going to get hit like, if we have a COVID collapse situation, it's going to get hit like any other stock does, because, the fear there is, well, are people going to be able to make it to the supermarket, to the supermarket to get staples, those kinds of things. But in any other ordinary circumstance, the bottom is really what should drive the picture here with the earnings per share. We thought Reggie looked good. This is even more dramatic and more consistent. What you love here are the big spikes in that earnings that are coming in on a consistent basis. That usually, guys, is a factor of earnings announcements and what the company has to say about what the future holds, okay? So that's when the aggregate consensus analysts out there are aggressively raising their forward targets. Thus, in VectorVest, we look at the trail, but we also look at those forecasts, and it gives us a great sense on where it's truly going to be in the future, okay? Dramatic improvement there. In my experience, that only leads to higher stock price. And the great news here, there are some dramatic pops in that earnings down there. I think you could actually see some pretty aggressive movement on Dollar General over the coming year, which is even in a stock that doesn't typically do that. That's what that tells me, and I'll pass it on to you guys. I think you can buy this one right now.
I agree with that. It's just coming off of a new one-year high, but still moving up. Couple of things. One, my wife and I just went on vacation. We went to Pigeon Forge. We drove from North Carolina to Tennessee. Good Gordon Gin, did I see a freaking Dollar General in the middle of nowhere, right next to a cemetery, or right in between an old shed in somebody's auto repair shop. But everywhere you look, there's a Dollar General, number one. Number two, when COVID hit, a lot of people lost jobs, right? Money was tight. Dollar General is a good place to go and still buy, as Steve said, some of the staples, but at lower prices. All right? You're probably going to find a lot of this stuff a little less than going to Walmart, than going to Walmart or going to somewhere like that. Now, they don't have food, you know, so you still have to go to Food Lion or to the Teeter or to, you know, Ingles or all of that stuff. But for all the paper goods and all that stuff that you can have. And you know something, what else? The more you look at Dollar General, the more stuff keeps coming into it. You know, and they keep trying to accommodate the people in these rural towns that don't want to drive so far to go to a big store. And you know, and it's everywhere you look. You see that big yellow and black sign, Dollar General, everywhere. So you sit back and you say, how's the stock $20 to $14? Look at how many stores they got, and they're making money. They're just making money. It's like printing money, all right? So that's the way I look at it. Susan.
Well, I'd like to first of all say I have learned another two statements tonight. One is good Gordon Jan, and the other one is as sure as shooting. And I have made a note of both of those to add to the VectorVest lexicon that I have to go off and Google. Steve Chappell was the guy that taught me a whole another ball of wax. I've learned that one over the years, and of course we all know there's a gazillion Glenisms. So just hashtag just saying, right? Right, when it comes to this stock, it's not a company that I would see as I'm driving by anywhere in Ireland. So I did, but obviously the minute that you hear the name, you get a good sense of what it was all about. And you know what really strikes me? I'd be interested to hear the audience's reaction on this. Is that so far, if you listen to all of us, but primarily all four of the stocks that have been put forward, they're all defensive. They're actually all defensive. They're all stocks that aren't necessarily going to move if the economy goes really high or really low. But this one is the most actually anti-cyclical of all, because just exactly as both the guys just said there, if people are worried about either their existing income or their future income, they are going to do something where they may be concerned about this, and then they'll decide to buy in shops like Dollar General, maybe where they might buy elsewhere. Now, I was particularly struck, and I'm particularly by when I looked at, if it's okay there to just take a look at the GRT. Yeah. If we put there, please. GRT on. Yeah, GRT at 21. I mean, to be such a, you know, like Glenn there talks about a stock that just keeps on printing money. My own description of this when I was discussing Walmart years ago was boringly profitable. It just keeps on going. But imagine to be boringly profitable or just keep on printing money, and yet you have a growth rate there of 21%. So I went in and I just did a little bit of digging on this stock, and I went and I took a look at the quarterly earnings, and there's three numbers jump out at me that underpin this, right? Number one is that it's net sales. Net sales means sales minus refunds, grew by a quarter in the second quarter of 2020 relative to the year before. Now, if that doesn't back up exactly what Steve said, like nothing does, is that sales in those right across, and that it grew to 8.7 billion from 7 billion. The second number that particularly struck me was same store sales increased by 18.8%. So when you actually look at why that was, it's that when people were going to the store, they were actually spending more. Now, just take into account there what Glenn said, which is that the more that you buy or the more that you browse in there, whether if it's online, the more the Dollar General actually gets to know you and your preferences. So what they have been extremely cleverly doing is using COVID to their own advantage. And I think that when you look at what both of Glenn and Steve have just said, when you look at what's underpinning that, and then you think about, well, how likely is that to continue? The answer is there's an awful lot that Dollar General are doing in order to make that continue. And speaking of continuity, we didn't take a look at the dividend, but I do just want to make the point about the dividend. If you just pull up the dividend amount and the dividend yield there, Glenn, that would be great, please. So the dividend amount and the dividend yield in particular, right? So I just want to talk to you about this for a moment. So again, you're dealing with a very defensive stock, a stock that is producing, and if we were to go and look at the amount of cash this company is producing, it's really, really high. But yeah, okay, perfect. So here we go. We've got a dividend yield of 67%, but the actual dividend itself is $1.44. Now, anybody who is an income-focused investor, as you will soon learn that I am, will obviously want to know how sticky is that. Can it remain? And I was interested to see that 691 million was returned to shareholders through share purchases and cash dividends. Now, it's a lot of money, isn't it? I mean, it's nearly 700 million, therefore it's nearly 0.7 of a billion, right? In comparison, the cash flows from the operations will actually increase by 157%, up to 2.9 billion. So is that dividend safe? Is it what? It really is, because the company is producing huge amounts of cash. One very last point I'm going to make on this is when you take a look, if we just put on the dividend safety there, you'll be able to see that anyway. We'll see where it is. It's at 97. I mean, in comparison, your first stock, West Farm, am I right that, Glenn, that was also the one where the dividend safety was up at that level?
West Pharmaceuticals.
Yeah, so I was really struck by that when I went looking at the amount of cash this company has. Now, you know, I'm always interested to hear about the way Steve talks about the company, and the way, I didn't know he was here since Moses parted the water. Actually, he's a very, you know, I have to say he's a very young looking guy to be around that long now, but all the same. But you know, the point is that you didn't even have to go and do the looking that I just did in order to find out about the tenacity of that dividend, because all you need to do was just take a look at it right there. So when you put all of that together, when you look at the strength of the earnings per share, when you look at the growth of it, it's boringly profitable and still growing as quickly as that. When you look at the dividend, when you look at the strength of the dividend, and also when you look at the fact that people are spending more there, and I don't know because I haven't been in one, because I haven't been in the States in a while now. But the point is, as Glenn was saying, they're learning more about you all the time as you're going. People are spending more there. They're spending more time there, both online and offline, and they're ultimately delivering more sales there. It's a fantastic pick. Very last thing I'll say is look at the CI. The CI again is spectacular in this. I know I keep coming back to it. The CI here is 1.3. Both actually of Steve's stocks, the Renewable Energy, the CI was 1.71, and Dollar General is 1.31. Both of them are very, very high. Again, you've got that long-term ability to withstand severe or lengthy price decline. So yeah, I have to say I'm giving it my thumbs up.